Let's take a look at the Dow futures. So we were looking at the Dow futures from the longer term perspective, where we had these highs in place from the end of March and the end of April, close to the beginning of May. And you can see here that we chewed through these highs in one of the scenarios that we discussed last week, where we were holding the 8-period exponential moving average. This is a daily chart of the Dow futures, by the way. So we closed above the one of these key levels, 13,200, and you can see here we had a fairly decisive close, and then we had a pretty tight day on Friday that held above that breakout level. So essentially what we're looking at here is, are we going to hold the breakout of these highs, and are we going to push much higher? So this is a pretty interesting scenario that we're seeing taking place in the Dow. We'll take a look at the other stock index futures, the S&P and the NASDAQ, to see if they are confirming. But this is a pretty major event. Now we're in holiday mode. Typically in August you're in holiday mode, and the volume has been very light. So the volume is, I don't have the volume on this chart here. Okay, that's a pretty easy problem to fix. So you can see here I've put the volume on the chart, and you can see here the volume has been very low for I'm not sure if it's low for this time of the year, but it's definitely low in terms of wanting to see heavier participation in this move in the market. But that said, price is the most important factor here in my opinion. And what we're looking at is the breakout of these highs and looking to see if we're going to hold. Now, we highlighted this as one of the scenarios that could play out. We were looking at different situations where maybe the price action would pull back hard to support either here or, at this 21 exponential moving average. Or, we were looking at a scenario where, maybe the price would, kind of chew through and break through. Now, I was expecting more of a break than that, but this is a break nonetheless, and we really need to watch these levels and see if we're going to hold these levels and start pushing higher. So this is a pretty big deal for the stock index futures. I mean, we haven't really seen new highs in quite a while. Let me just zoom out the chart here, and we can see, if I zoom it out quite a bit, you can see we haven't really, hit new highs in a long time. So this is a pretty big deal, and we'll be looking to see, maybe where this might be going, and maybe, what's coming up for the future here. What's driving this? Well, in my opinion, what's driving this, I believe, is some form of stimulus or quantitative easing that either the market is expecting, or programs that maybe have been implemented, and the smart money knows. They either know it's coming or they know it's being implemented. There hasn't really been that much talk of it that I've heard, but I think you have to go with the evidence that's being presented to you, and that is the price action. And from what the price action seems to be telling us is there's something going on here. I believe it's QE3 or quantitative easing slash stimulus related, but we don't really know for sure at this point. We're just kind of following the evidence that the market is presenting us. Let's take a look at some of the other stock index futures and see what they look like. Okay, so you can see that the S&P is basically, the S&P futures are basically doing the exact same thing as the Dow futures. I just had to fix this indicator there. You can see everything's kind of moving higher. Our trending indicator is moving higher. The price is breaking above these highs very slowly and tentatively, but it seems to be climbing that wall of worry. You can see that we've broken above the S&P's highs around 1411, 1412. So that looks pretty much the same as the Dow. Let's take a look at the let's take a look at the NASDAQ futures. And basically, the NASDAQ futures look a little bit weaker. I know that Apple was really, really strong on Friday. I think it broke to new highs. I'm not going to review that chart here, but looking at the Apple here, rather the NASDAQ, looking at the NASDAQ here on the daily chart, you can see we're right below the highs. We're right at those recent highs from middle of March, beginning of April. And you can see here we haven't quite chewed through them, but we look like we want to go higher. Everything's kind of in alignment here, and it looks like the NASDAQ wants to follow the S&P and the Dow futures. And if we look at the transports were really, really sluggish and in the middle of their range, in the middle of this wedge for quite a while. And you can see now that they're starting to perk up. They haven't quite broken through the top of this wedge, but they look like they're really trying. So you have, an 8 period crossing over the 21 period. It's still pretty choppy. It's still, it's still coiling in this wedge here. What you really want to see is a confirmation of the transports along with the Dow futures and the other stock index futures. So everything's sort of starting to paint the same picture here. So let's take a look at these markets from the Darvish squeeze perspective, and we can see some pretty significant things setting up there as well. So the most significant thing setting up on the stock index futures from the Darvish squeeze perspective, this is really, in my opinion, really significant here. You've got on the weekly chart, you've got a situation where you've had a recent long breakout or a recent Darvish squeeze long signal on the weekly chart. So let's expand that out. I just need to clear this off. Let's expand out the weekly chart of the Darvish squeeze chart of the Dow future. So if we look at this, what we have here is we have this Darvish box in play. We were in a squeeze, and the market fired along right around 13,215. That's when the price action broke out of the top of this weekly Darvish box, and we have everything in alignment here. This is a pretty significant event in my mind. I really watch these weekly charts because they really give the overall bias, overall directional bias on where the market wants to go, and they usually represent multi-week events. So long signal here, the Hakanashis are blue. We had this squeeze fire off 2 weeks ago. The price action just broke the top of this Darvish box resistance this week. We have the MACD crossing over in alignment. It's over its zero line, and we have the trending indicator slightly divergent, but it is in alignment. So this is a really big deal in my mind. Let's take a look at what happened the last time this sort of scenario played out. So if we look to the past for guidance into the future, what we can see here, and I just need to kind of move things around a little bit on this chart. Let's see here. So if we look at this, we had this Darvish squeeze in and around this area. The last long Darvish squeeze that fired off was around 12,000, just over 12,000, 12,020. And then we had a situation where we went, these lines denote where these breakouts, close to where these breakouts took place. So this was, for example, here, 12,000, almost 12,020. Okay, imagine that's there, 12,024. So then we had a long squeeze, a long Darvish squeeze fire on the weekly chart, and then we pulled all the way back to 11,535. So in essence, what you had was you had some directional guidance with the Darvish squeeze breakout when it fired long in this area, and then you had a pullback. So it fired long in this area, it pulled back 500 Dow points. That's pretty significant, and that would kind of lead you to believe that, it's going lower. That's 500 Dow points. That's pretty huge. So then look what happened. It pulled all the way back to weekly support, 21 EMA, weekly dynamic support, and then it pushed higher ultimately into the highs that we are now just breaking through. So it took us all the way up to these highs around 13,200. And that's why I say this is a big deal, and this is a potential multi-week event, because we broke out at 12,000, we pulled back to 11,500, but we ultimately made our way up to 13,200. Now, it didn't go straight up to that level. This is a multi-week event, but you can see it kind of chewed until it reached that level. It chewed right up to that level. So when I'm looking at these setups, I'm not necessarily looking just to go long at the breakout, but what I'm looking at is saying, okay, this setup is telling me that the market potentially wants to go much higher. Can we get a 500 point pullback like we had here before that happens? Yeah, that's certainly possible. I mean, this is a weekly chart. This is a potential multi-week event, but I'm looking at this saying and telling me, hey, look, the market wants to go higher, or it's saying that it's showing that it wants to go higher. So pay attention to that. So I'll be looking for macro direction to the long side over the following couple of weeks, several weeks. This is a multi-week event, unless, if we get a pullback all the way down to this, let's say 21 exponential moving average on the weekly chart, back down into, let's say, 12,800, 12,600, and we fail that, well, then that's going to change my mind. But, a several hundred point pullback in the Dow down to those levels, that's going to be something that can be, short-term playable. But if we hold these levels and just push higher, I mean, I won't even be looking at that. But if we do pull back to these levels, I'll be looking for support at those levels and ultimately a push higher. That's kind of what I'm looking at over the next several weeks, and I hope that makes sense. Now, if this signal follows through, on this weekly chart, what we could be looking at potentially is this multi-week event taking us, much higher. I'd be looking at, potentially looking to see if we can get to, Dow 14,000. So, I'm kind of looking at targets up and around these areas if the signal follows through, and I'll be watching this very, very closely. So we talked about what a big deal that was on the weekly chart. Now, if we look at the Darvish squeeze on the Dow from the daily perspective, you have pretty much the same story. This is, this was a signal that fired back in here, and it is still in play. This Darvish squeeze breakout is still in play. MACD's in alignment, my trending indicators in alignment, and we have potential targets, up and around these areas, somewhere in and around here. So, this is kind of grinding higher and following through on low volume, as we pointed out in the other charts we were looking at. So, you've got a confluence of signals between different time frames, which is something that I really, really like to see as well. Now, if we look at the S&P from the Darvish squeeze perspective, we don't have a Darvish squeeze in play, but we have the price action breaking above this weekly Darvish box back in here, and we do have a Darvish squeeze in play on the daily chart when it broke this level here. Not sure, 13,000, it's kind of hard to read, or 1,300 rather, and maybe that's 15-ish. No, that can't be 15. That is around 13,000, maybe an 85, it looks like, 1,385, sorry. So we're looking at targets somewhere up and around here. We're pretty close to those levels, within 10 or 15 points on the S&P on the daily chart. So, you've kind of got a confluence of the daily chart. Now, if we look at the NASDAQ, we don't have a weekly signal, although we are testing this weekly Darvish box. But on the daily chart, what we're looking at is we had a signal fire back in here, a Darvish squeeze long, and we've pretty much hit that target. So you've got alignment there, but this signal, for all intents and purposes, when it fired back in here, this Darvish squeeze on the daily chart of the NASDAQ futures has pretty much hit its target within 4 points. I mean, I would consider that mission accomplished. So looking at that, that still looks good. Are we ready for a pullback? Possibly. We'll be watching for that in all of the the stock index futures. Potential pullback is possible, and potential grind higher is possible as well. So we'll kind of have to see where the market is going and where it's leading us. If we look at the transports then from the Darvas squeeze perspective, you have a potential breakout on the weekly chart with this elongated squeeze that we've been looking at for quite some time here. So here's the top of your Darvas box. You can see price was in the middle of this range, and now it's starting to push up towards the top of this box. If we get a Darvas squeeze breakout on the weekly Darvas squeeze, that's going to be a pretty big confirming deal. So I'll be looking for that scenario and that situation to play out. If we look at the daily chart, let's say, let me just expand out the daily chart. The daily chart is starting to perk up and is breaking this Darvas box, but we don't have a Darvas squeeze in play. We do have a couple of other interesting things in play, though. You've got your Hakanashi's blue. You've got momentum on the squeeze going higher. Your volume is picking up a little bit. I wouldn't even consider that picking up. Now you're testing the zero line on your MACD. You want to see it break above the zero line there, and you're getting a little bit of action on the trending indicator, but not much. But the price action itself, you've got an 821 crossover here, 8 EMA crossing over the 21, break of the Darvas box. Be watching this very closely to see if we retest, let's see those highs, and ultimately get above some of these highs in the background there. So that's all I have for the stock index futures this week. But another thing that I wanted to point out is let's take a look at the bonds quickly from the Darvas squeeze perspective. You've got the 5-year, the 10-year, and the 30-year. So if we look at the weekly chart, it looks like just a pullback to support on the weekly chart. The daily chart here on the 5-year, for example, pulled back. It did fire a Darvas squeeze short going back, over a week ago, and it looks like, that target was met, pretty much met. So this is a question that, in my mind, where I'm saying, bonds and notes have been in a huge upward trend and a huge bubble for quite a while now, and I'm wondering if this is kind of the first chink in the armor here, and if this is going to be the beginning of maybe lower notes and bonds and potentially higher interest rates. Now, I know that the governments of the world have been trying to prevent this through stimulus, but at some point you really can't stop the greater market forces. So at some point, you can only do so much for so long, and then, the levee kind of breaks. So I'll be looking at this to see if bonds and notes and bonds are ready to kind of roll over here, and if we should be maybe potentially looking at higher interest rates as a result, right? Because notes and bonds move opposite of interest rates. So when bonds and notes are going higher, interest rates are typically going lower. So let's take a look then at, this was the daily chart of the 5-year, and you can see the short signal, and it basically hit its target, the short Darvas squeeze signal. At one point, all my screen was lit up red here, and it was like there was a confluence between all of these instruments and all of these time frames. So these have kind of played out. I didn't really do any video. I did a short video on it, but I haven't posted it. I did that the other week. It was for another site that I'm working with. That'll be going up at some point, but it's kind of irrelevant now in terms of what we're talking about today, because the signals have already, sort of fired. So if you look at this signal fired here, these were printed in real time on the charts, where you had, the Hakanashi's red. It broke the Darvas box here while it was in a squeeze. So you have this Darvas squeeze, according to my parameters in the setup that I've laid out for the Darvas squeeze, where this was just, these were firing on all cylinders, on all instruments, on all of these daily time frames. So this is the 10-year. Target has basically been met, mission accomplished. So now let's take a look at the 30-year here. and you can see that that was the same situation where the exact same situation. So, and it looks like target was met. So this is really interesting. I'll be watching this to see if maybe we have a change in the direction of these markets, and if that could be kicking off a new trend lower in these instruments, and which would translate into eventually higher interest rates. So the 2-year I think was pretty much the same scenario. Let's just take a quick look at the 2-year. The 2-year fired a Darvish squeeze short signal as well here on the daily, and it's about halfway to the target that is printed on, the target being this Darvish box projected out on a 1-to-1 basis lower. That's ultimately the big target that I look for in these kind of setups. So we've hit about half the width of that box. So we've hit about half of the target in the 2-year. So that's all I have this week. This video is a little longer than expected because I wanted to cover these instruments. I think this is pretty important because, traditionally you have, stock indices moving higher, bonds moving lower. We have that kind of correlation in place. I wanted to point that out. So I hope this video helps, and we'll look forward to seeing you at the next meetup or at the next video update. Thanks and good trading.